Welcome to the Motley Fool's Crunch Time series, where we scout out a single company from their story to their opportunities and risks. Today I'm covering Lucid Motors, the electric vehicle company. Let's start with the company's business strategy. Lucid makes cars. They make the Lucid Air. That's the one that's in production now. There are a few different variants of that, but the price for the Lucid Air starts at about $70,000 and goes well higher than that. The next vehicle on the company's agenda is the Gravity. They recently announced that. That's going to be starting at $80,000, a little bit bigger vehicle, a 3-row SUV, and that's going to begin production later this year. Despite those high price points, the company isn't profitable, which is a challenge, but I will get to that risk later. Let's start with the company's growth opportunity. Lucid is an electric vehicle leader, one of the earlier players in the space, and they arguably have some of the best technology in the industry with very efficient batteries and drivetrains, but the company is very small with about 34,000 units of capacity in Arizona, 5,000 units of capacity in Saudi Arabia, the availability to expand both of those to 90,000 and 155,000 respectively. So in time, with nearly 250,000 units of capacity and very high pricing, if Lucid can get to the point where it's also very high margin, this could be a valuable company even in a sort of select niche in the EV space. But there are huge risks trying to get there. The auto business is extremely difficult and Lucid is struggling. Deliveries are only at about 3,000 units per quarter, with 3,109 in the first quarter of 2025. Gross margins are also negative 89%, if you can believe that. And operating margins have held steadily over negative 300%. Not surprisingly, free cash flow and operating cash flow are also negative. You can see from this chart, the company is losing about $500 million in operations each quarter. And when you add in CapEx to that, their burn rate on a free cash flow basis gets to about $3 billion per year. To make matters worse, the EV industry is really starting to struggle. There's competition that's coming in. They're improving and lowering their costs. That's increasing supply in the market. And on the demand side, EV adoption is slowing, particularly in the US. So you add all those risks up, and Lucid is fighting for a smaller and smaller pie, and it hasn't shown the operational ability to actually make money in the auto business, which at the end of the day, manufacturers have to do. So what's my prediction? With a cash burn of around $3 billion per year, Lucid has a long way to go to improve their operations and get to free cash flow positive. And their balance sheet just doesn't tell us that it's going to be able to get there. There's about $4 billion worth of cash on the balance sheet as of the end of the fourth quarter, but that was offset by about $2.1 billion worth of debt. Then you have the cash burn. The company also raised another $1.1 billion worth of convertible debt earlier this month. So the risk on the balance sheet, the debt is growing on the balance sheet, and that cash position is not improving as the company's cash burn continues. This can ultimately lead to a downward spiral where a falling stock price makes it harder and harder to raise money, whether you're looking at debt or equity. And for a money-losing company, you have to have the availability to raise cash. So to recap, Lucid was one of the hottest SPACs on the market during the pandemic. Growth in operations has never quite met those expectations. Margins are terrible and are nowhere near a sustainable level for Lucid. Competition is getting better, and there's simply no end in sight to the company's cash burn. I think that makes this a stock to avoid, especially in this uncertain market where we may be in for an economic downturn both in the US and globally. Now, with the Motley Fool, your comments make us all smarter. Please comment with your own research and insight about Lucid. Tell us what stocks you want to see next on Crunch Time. And of course, check out fool.com/invest to get the top 10 stocks to buy right now. Thanks for watching, everybody. See you here next.